Hey, I'm Felissa Rose, and you're watching Keto and Crime.
By to Soundgarden frontman Chris Cornell.
CBS 2's Jeff Nguyen is live at Hollywood Forever Cemetery, where services were held. Jeff?
Well, Rick and Susie, for the last couple of hours, fans have been pouring into the new gravesite for Chris Cornell. Some have dropped off floral arrangements like the ones you see right here. And as you walk through this area, you will notice that he's got some great company here, including his new neighbor, Johnny Ramone. A rendition of Hallelujah soared over the Hollywood Forever Cemetery as members of Lincoln Park paid tribute to rock legend Chris Cornell. The lead singer of Soundgarden and Audioslave died last week while on tour. Today, stars like Brad Pitt comforted Cornell's widow and daughter during a funeral service. There were bandmates including guitarist Tom Morello of Audioslave and Rage Against the Machine. Josh Brolin was one of the famous names who eulogized Cornell. His fans because it's being investigated as a suicide.
It's just so sad that, he was alone, and in such a dark place.
Even though we saw famous faces like Christian Bale, who starred in The Promise, which Cornell contributed to the movie's theme song.
Hey everyone, Keto Comic back with Thought Crime, Keto and Crime, and the Keto Comic. Today we're going to be looking at the National Prearranged Services and Hollywood Forever scams. Yes, this is a little weird because we're going to be talking about the death industry and a cemetery, particularly a cemetery in Los Angeles that is a bit of a tourist attraction. So we're going to be looking at all of that and how the money for that for that cemetery, which is sometimes treated as a park, was gotten from innocent Midwestern people who were scammed. So let's take a look at it, shall we? What is Hollywood Forever? Well, Hollywood Forever is a cemetery and mausoleum that resides at 6000 Santa Monica Boulevard in the Hollywood district of Los Angeles. It's now an entertainment venue. It has a very unusual history. It was originally founded 1899 as the Hollywood Cemetery and remained that until 1998. When it officially became Hollywood Forever. In between that, it was both Hollywood Cemetery and Hollywood Memorial Park. Jules Roth, he's actually a convicted felon for some financial scandal, but his family owned it, and they ran it for the majority of its time until it was sold in 1998 to the family we're about to discuss as the subject of this video and or podcast. So, in 1939, he himself purchased 51% stake in the cemetery, and he ran it as you would a normal cemetery. The big draw for this particular cemetery, all the A-listers of that time wanted to be buried there, because so many A-listers were already buried there. You had silent film star Rudolph Valentino, who was the first verified Hollywood hunk. You had Stan Laurel from Laurel and Hardy. You had literally anybody who was anybody in silent film through the golden age of film in the 50s and 60s were buried there. And if you're watching on video, you see here to your right a marker for Hattie McDaniel, who won an Academy Award for Gone with the Wind, first African American to ever win an Academy Award. She wanted to be buried there, but the Roths would not allow it because it was a white-only cemetery. So she was interred elsewhere. But when the current owners bought it, they immediately erected a memorial plaque to her so that she could be memorialized in the cemetery she wanted to be buried in. Now think about that. Not allowed to be buried because of the color of your skin. Got news for you. For all of you that have that opinion, after we die, we're all the same color. So, yeah, let that sink in, that was less than 100 years ago in the USA, in California, the most liberal of all the states. It makes you think. Anyway, so you had even modern-day A-listers, singer of the Ramones, buried there. That was the statue on the front of my presentation there. It is a place where a lot of people wanted to be buried. However, they would not allow it because of segregation for some of the people. Now, he ran it, like I said, just like a normal crematory and a normal cemetery up until 1994 when the Northridge earthquake hit, and both the mausoleum, the crematory, and a lot of the vaults were damaged from the earthquake. And Mr. Roth, could no longer sustain it. He didn't have the money to repair it, and it fell into disrepair. And finally, probably the most interesting scandal, they hit this in 1974 with the death of Cass Elliot from the Mamas and the Papas. She was being cremated there, and the crematory the incinerator actually broke. It was on its last legs, and please, no fat jokes. We know Mama Cass was large. I'm large. It had nothing to do with that. It just happened to be how do I put this? An unusual and unforeseen circumstance that the incinerator, who was on its last legs, broke while she was being cremated. So from 1974 to 1994, things just started to fall into a lot of disrepair. The Northridge earthquake, 1994, put the final nails in that coffin, unironically, and it basically, the Roths were forced to sell. They sold to the Tayo LLC Corporation in 1998 for $375,000, and from there is where we become Hollywood Forever. It changed its name. It became an amusement of sorts. The new owners, who we will talk about, went on television. There was an HBO documentary made about them called The Young and the Dead, where they talked about the renovations they were doing at the old cemetery. They showed horror movies during the summer up against the wall of one of the mausoleums. They made it into an amusement park of sorts because he said that the cemetery was for everybody and that death is the great unknown, but you shouldn't fear it. Kind of a positive message if you think about it.
And read the story of this place. It's etched in stone.
Describe.
And the best name we have for it is Hollywood.
And he wanted it to be for everyone, so it became a tourist attraction, and that's how he saved it, by making it a curiosity. Now, let's find out where some of the money for this huge transition, for this cemetery/amusement park, came from, shall we? Tyler Cassidy was the new owner of Hollywood Forever. He's the one featured in all the documentaries. Going to insert some clips. An unusually handsome young man that basically became an A-lister in Hollywood, if a mortician can become an A-lister. And he revitalized Hollywood Forever. But his story starts back with his dad, James Doug Cassidy, who was born in the 1950s in the small town of Buffalo, Missouri. He married his high school sweetheart, Rhonda. They knew there was very little for them in Buffalo. Buffalo is still kind of trapped in another century, even if you go there today. I've been through there. It's very small, very quaint, very farm-oriented, which you'll find a lot of that in the Midwest. Nothing wrong with that. Farmers feed us all. But it's definitely kind of trapped in its own era. And he knew that his future wasn't there. So as soon as he and Rhonda married, they took off. He went to law school near Springfield, Missouri, and became a lawyer in Springfield, Missouri. He had a very successful practice. As far as we know, there were no improprieties around his actual law practice, but because he was so interested in the stock market, and this was in the late 70s, early 80s, he decided to run an investment club. These were pretty popular in the 70s and 80s. They weren't exactly brokerages, but they were just a group of friends that would get together, talk about the stock market, study the stock market, and then pool their money and have somebody within the club invest for them, and then whoever invested for them got a cut. Now, all this sounds really like it's running afoul of the law. Not really. I mean, things being private have gotten you around certain regulations in the United States for a long time. You know, investment clubs, and there's private clubs. In my home state of Alabama, there was actually a 24-hour bar that operated in Birmingham, even on Sundays, because Alabama's still very much under the blue light laws where you can't sell alcohol on Sundays. So this bar actually operated on Sundays because it was considered a private club. You filled out an application, you paid a fee, and it was considered a private club. So they got around all those rules and regulations. The same here. It's just a matter of semantics. But anyway, Doug Cassidy was that person that invested for everybody. But instead of being forthright, he was only investing part of the money and was running kind of a half Ponzi scheme and basically pocketed a bunch of the money and got busted for it. And he actually had to surrender his law license and plead guilty in 1982. He served 6 months in federal prison for what he did. 6 months. He defrauded people out of just under, like $400,000 or something. It wasn't the biggest amount that's ever been swindled from somebody, but in the 80s, that's a lot of money. Heck, that's still a lot of money today. But once he came out of prison, he realized it's both his legal career, because he was disbarred, and now because of what he did with the investment club, he could never legally work in either the financial or the insurance industries, because insurance is loosely tied to finance because of the variable products that a lot of insurance agents sell. So he was kind of stuck as to what to do. Did he go get another job? Does he go back to Buffalo and become a farmer? No, that wasn't Doug. Doug had a taste for the finer things. He had a huge house from when he was a lawyer. He knew that white collar was the way to go, so he would find a way to get back into that industry that he knew the money was in. So he forms a trust for the benefit of his family, Rhonda, now his 2 sons, Brent and Tyler. And with this trust, he buys National Prearranged Services in 1984 and relocates the corporate office to Clayton, Missouri, just outside St. Louis. Officially on the books, Doug was not president. He was not CEO. He was not anything. He was a consultant. He could still be a consultant without having to have a law license and without letting his conviction get in his way. He was a consultant to this business, but everybody knew who was, pulling the strings. But let's talk about National Prearranged Services. It was part of the booming burial industry. It sold prearranged funerals. They sold it door to door with door-to-door salesmen in small towns all across the Midwest. How does this work? Well, basically a salesman knocks on a door. Usually they buy lists of potential customers and they target them first, but then they just go neighborhood to neighborhood and talk to whoever answers the door. Usually, once they get in, they like to sort of talk, especially to the elderly or those that are, getting on middle age. I'd be a target. Will be 45 years old. People in their late 40s, early 50s, they start to target them because they know they're starting to think about final expenses. And what they do, they basically sell them. They sit down, they kind of plan a funeral with them, what they want, approximately how much that would cost in today's dollar. And then they sell them basically what is a life insurance policy that will pay out enough for that funeral as well as to account for inflation. So they do some math and they come up with a set amount that will pay for that funeral, even if it's 20, 30, 40 years from now. So it's basically life insurance, but it's specifically for burial. So it's capped at a certain amount. It's not going to get up. You're not going to sell somebody a $100,000 policy or even a $50,000 policy. You might sell somebody something to cover a $7,000 funeral, which is an average cost for a funeral. And then, with inflation, that policy might eventually pay out $10,000. So we're talking about a fairly small policy as insurance policies go. And that's how they would sell them. They would sell, let's say 50, 100 of them. And then these salesmen would go to the funeral homes in the area within a 50-mile radius and say, hey, I've got 100 pre-paid plans here. Do you want these? Do you want to be locked in to receive these funds and do this work when these people die? Of course, the funeral directors are like, yes. So they would then sell those blocks of policies to the funeral home, and they would be locked in. They would attain another fee from the funeral home for buying that block of business. And then those people were literally locked in. They would let the people know what funeral home held their policy. And now they've sold it again. And now this funeral home has a guarantee that they're going to get this business when this person dies. So it's kind of a twofold sale. They first sold the policies to the person, the beneficiary, then to the funeral home. And this went on for many, many years, fairly successful. They sold a lot of these. They sold in the tens of thousands of these policies door to door. In the meantime, that trust that owned the insurance company also started picking up other insurance companies selling other life products. They picked up cemeteries so that they were now getting the actual money once the people died. And they were also buying their own funeral homes. Not too many of them, but a few. So now they were kind of a one-stop shop for death, so to speak. As morbid as that sounds.
Here and coffins for a one-stop shop.
Now, the money for these policies was to go to either to the insurance company who, by most state laws, have to maintain a reserve for paying claims. So this money should have been invested in either some kind of mutual fund or in a bank with a set rate of return. This money should be invested. And then, anything off the top could be considered profits. But instead, Cassidy's company was a little ambiguous about how they invested their money. In fact, most people that asked about it were either told, the funeral directors were told it was none of their business, and the clients were kind of given a shrug off. So no one really knew how Cassidy's company was investing their money. Truth of the matter is, they weren't really investing the money at all. They were putting the money in a bank account, and they were spending it. The trust was withdrawing most of the money they were keeping out enough to pay operating expenses, and were spending the rest. And this was Cassidy's kind of orders, and by this time his oldest son Brent was running the company at the age of 23. Tyler worked a little while in the business, but then moved on to California and took over the Hollywood Memorial Cemetery and created what we know now as Hollywood Forever, using loans taken out from these policies. So the money for these policies were not only being used for very extravagant spending by the family, and think about anything an extravagant family would do. Private jets, big houses, cars, college educations, jewelry. Rhonda Cassidy once spent like $60,000 in a high-end furniture and jewelry stores. I mean, just insane amounts of money being spent. They regularly had American Express bills topping like $30,000 a month. So they were spending this money and having a good time with it. Tyler took some of the money as seed money and went, and that's how he sort of purchased Hollywood Forever, though when he was later questioned, he was able to produce promissory notes where he had only taken a loan from his father's company and was paying those back as agreed upon. So I want to say right now, Tyler was never indicted or accused in any of this. He was part of the lawsuit because he was on the trust, but his Hollywood Forever was never sued, never found to be guilty of anything other than borrowing money in a kind of an unscrupulous way. So I don't want you to get the idea. Hollywood Forever is still there. It's still functioning. He since has bought another cemetery and runs it, as far as we know, on the up and up. So I think he was the good egg of this family. He just had other dreams rather than staying in the Midwest. He wanted to perhaps be an actor or something. That didn't work out, so he took another route. And as far as we know, he paid back everything he borrowed from his father's company. But still, it was still sort of a fraud against the people that bought these policies, because that's not what they intended for their money. Their money was supposed to be put in a safe investment and used to pay their claims when they came around. 1992, state of Missouri, this is way before Hollywood Forever, but state of Missouri Board of Insurance starts investigating. Brent was their main target, who was the 23-year-old president of the company at the time. It was determined by 1997 they had sold well over 10,000 policies, and they were under investigation as to why their accounts were underfunded. How were they going to pay these claims when they started rolling in? Well, that, as you can imagine, that damaged their reputation. And so the door-to-door selling was no longer working. So they came up with another plan. If we can't go door-to-door and sell directly to the customers that want to use our product, then let's sell to the middlemen in a reverse way. They were already selling to clients and then turning around and selling again to funeral homes. Let's reverse that. So in 1997, they started the MPS Girls program. Think of Hooters girls selling funeral policies, because that's what this was. Very provocatively dressed girls that would go to all kinds of funeral and mortician conventions, would set appointments, and then they would go in and talk to funeral homes and basically talk them into buying a block of policies and then turn around and sell them to their clientele. People that would come in for funerals, they would then talk with them after they took care of their loved one, and they would sell the other members of the family these prearranged funerals. So they reversed it and sold another 10,000 policies that way. Up until now, they had been running just a good old-fashioned Ponzi scheme. Money come in, it's put into the bank for a short time and then withdrawn and spent for the benefit of the family. So that's what they were doing. They would leave just enough in there to run operations, and everything else was taken out and spent. So it was a traditional Ponzi scheme, where as long as the amount of money coming in exceeds what's going out, you're fine. But then they started to dwindle, so they came up with their second scheme with the NPS girls, and money started to tick back up. But they also started another sort of scheme along with this. By this time, they had 2 offices, one outside St. Louis and one in Austin, Texas, where all these applications came in and were processed with the checks from these funeral directors that sold it to their clientele. Most of these funerals were sold on a one premium basis. That is, you bought a $7,000 funeral, you paid $7,000, you paid out the policy, and then that money was to be invested for it to grow so that your funeral could be paid for with inflation. So that doesn't really help the family. Like, if there's a paper trail showing that $7,000 check came along with this policy, well, then they have to account for that $7,000 check. So they started another scam where they would have employees in these offices. These employees were told they were correcting mistakes made in the field. They were basically using whiteout, good old-fashioned whiteout, to alter the applications when they came in. Usually, they would change it from single premium, one time paid in full, to monthly, and they would alter it to where it looked like the person that bought the policy paid 1 month, and then they were going to be making payments. And then from there, they would send it on. Like I said, they didn't self-insure. They were more of a broker. So they sold all these policies for these other insurance companies. And so what they would do, they would alter the applications and then send that altered application with the appropriate amount of money, 1 monthly payment, into the insurance company in question. And then from there, they were required. They took the balance. Like, if Grandma gave $7,000 for this policy and they charged her a $300 monthly premium, then they would pocket $6,700. And so from there, they were required then to make the monthly payments on the behalf of Grandma until that policy was paid in full. So it was kind of a bait and switch. They took the money but still had to make the payments, and they were counting on the influx of other money coming in to be able to stay ahead. Very risky business there. And as you can imagine, as long as The money exceeded the money coming in exceeded the money's going out. This worked really well. But then cracks started to appear. They started missing premium payments because they didn't have enough money to pay the premiums after they altered these contracts. And so they started to default on some of these insurance policies. So some of these people, even though they had paid in full, lost their insurance policy because of fraud. And as you can imagine, the states started swooping in. To cover this, they started a third layer of fraud where they would bundle these insurance policies together. The ones that, like I said, they also owned a couple of insurance companies. So the ones that their actual insurance company owned, they would bundle them together. And they would take out loans with Allegiant Bank and other banks. And then they would turn around and use that money to pay the premiums owed to other insurance companies where they acted as a broker. Convoluted. It seems like it would be a lot easier just to be on the up and up, but they didn't see it that way. For those of you watching on video, this is Tyler Cassidy here to your right. This is the guy that owns Hollywood Forever, the youngest son. The one that was actually not part of the fraud. He left the company long before that. He did take out a loan from his father's company, but was paying that back as agreed upon. And he's since been self-sufficient. Let's move on, because as all of this happens, you start getting bank examiners, the SEC, and all the insurance boards of all the states, particularly Texas and Missouri, where these guys operated, and Ohio, where a lot of their policies were sold, were sweeping in on them. Eventually, it just failed. You had insurance policies being canceled for non-payment. Then you had these loans going into default because they couldn't make the payments on the loans. And then you had state insurance boards having to go in and save the day. Every state has a reserve fund that's taxpayer funded that will prop up a defaulted insurance company if something happens. And all of those took place here in Ohio, Missouri, and Texas. They all came in to make sure that these policies were propped up. So in every case, whether they sold it to their client or not, or they bought a block directly from the company, funeral homes have these policies, and they are required by their states to honor these policies. So the states would step in and pay for those funerals as they were happening, but they would only pay the face amount of the policy. If Granny bought a $4,000 policy, $4,000 is what the state would pay for that funeral to honor that policy. But because of inflation, that $4,000 funeral could have cost a whole lot more because they were still guaranteed what they bought within the policy. So funeral homes were losing money because of this. And as a result, in 2007, both their offices were raided by insurance investigators and the FBI. It came out that the business was basically insolvent. It had been literally looted by the family. Every dime had been taken out, and $600 million was missing. 2009, the state receivers for all of the state insurance boards that were having to honor these policies sued Doug, Rhonda, and Tyler for the missing $600 million. Tyler, like I said, was later cleared because it was shown he had nothing to do with the fraud, but the other three were ordered by a judge to pay that money back. They were ordered to pay around $435 million of it back to their victims and another $103 million back to the state. Also, Doug, who was the consultant, and his son Brent, along with 3 other executives at the company, were indicted on federal racketeering charges. And in 2010, they were sentenced in a range from 18 months up to 10 years, and they actually served those sentences. Most of them are out by now, but they did serve time for this and will never be able to work in this type of industry again. They will be barred forever from that. I'm sure this bankrupted them because the state seized all of their property and assets and sold them to pay their bill. So you're looking at a family, at least that side of the family, that pretty much bankrupted themselves. They lived the high life for a long, long time, but in the end, they kind of paid the piper for that. Also, Allegiant Bank, who not only housed their actual bank accounts and then again turned around and loaned them money on these policies, they were under a federal investigation and were sued and had to pay a settlement of around $40 million for not doing due diligence on these accounts. So that's the story of Hollywood Forever. National Prearranged Services. I guess even in death, people want to screw you. What do you think about this? Let me know your opinion. Have you ever bought a funeral policy or a prearranged service plan? Be careful of those things. Read the fine print. Anyway, I'll be back soon with another true crime video. Thank you so much. Like, comment, share, subscribe. See you soon. Keto Comic out.